So a lot to talk about today in the market. We did see some downside early this week for the S&P 500. And not only have we seen some downside, but there's two critical things that have happened so far this week. One being we've had two gap downs that remain unfilled. That is one key thing. And the second one being we closed the daily candle today below this blue trend line right here. And if I go to the hourly chart, you can see over here, this blue line goes all the way back to this pivot bottom from down here. This is on May 24th of this year. And you can see this has acted as a key support numerous times on the way up. For example, over here, end of May, over here in early June, and you could see over here just last week. And as of today, we did break below it on the daily. And not only that, we also closed the daily below this minor demand zone. This comes from back here. You can see there was some difficulty getting above this range because before it acted as a key supply zone until we were able to break up above it. And it did act as a minor support over here yesterday where we did have a bounce. However, after the gap down today, we also closed below it, which is very critical. And this area is going to act as a key pivot going forward from here, because if bulls are unable to get it back up above this level, then we can see some more downside to around this 4,320 level. So at the moment, the bears have some momentum, especially because of these two unfilled gaps. That can be a characteristic of an impulsive move. Now we'd have to see confirmation, especially tomorrow and Friday, specifically those days, because Thursday and Friday, almost every single week now for the past 2 months have been green. If you just look back at each of those, you can see for the most part, especially Friday, we've seen a green day and a volatility crush on that day. There are some differences that I've seen so far this week. A lot of the bids have been getting absorbed quicker than normal, and even these bounces that we've seen right here as of yesterday and today have been short-lived, followed by further weakness and downside. So there's potential that could just be a short-term correction, at least minor correction, or this could actually be a start of a more substantial pullback that can bring us back into the 4,200s fairly soon. There most certainly is a setup for that to happen here, especially because we do have a head and shoulders pattern on not only the S&P 500, as you can see here, with this being the left shoulder, the head up here, as well as the right shoulder, and now we're at the neckline. So again, why this minor demand zone is very key. If bulls are unable to get back above this, we can see selling accelerate down to this 4,320 level. So again, do mark this roughly 4,370 to 4,380 range on your charts, a very key range, as well as this trend line up here. But regardless, there's a head and shoulders pattern here on the hourly chart, as well as on QQQ. We also have a head and shoulders pattern. We have the left shoulder here, the head, and then just a bit of a higher right shoulder over here. And also on QQQ, we're at that neckline level, neckline right down here. So around this 361-ish to 362 level. If this is broken to the downside, then we can see this have an acceleration of selling. But again, tomorrow being Thursday and then the following day, Friday, super important days, especially because every single week for the most part, we've seen those days end green. So it's going to be a very big test heading into the end of the week to see if the bears can keep up with their momentum. So do watch, especially this range on QQQ. This also happens to be the low that was made on FOMC last week, which typically is a good support / resistance area where you saw that wick go down to. And in this case, we bounced off roughly 361. So 361 is going to be a key area. We also bounced recently, as of yesterday, actually, off this level again. So watch this going in tomorrow. Watch this as well in terms of the purple zone I have right here, because under there is more bearish bias till we get around the 4,300 to 4,320 level before any form of another minor bounce. Additionally, something else I'd like to look at here is Apple. We did break below this pennant pattern. This is only on the 15-minute chart, so it's not a major chart pattern. However, we did break below this and it did see some signs of weakness, a little bit of strength into the end of the day. However, we were able to close the day red and also below this key pennant pattern. And of course, with Apple being the largest holding in both the S&P 500 as well as NASDAQ, this can create some more weakness on the rest of the market. As long as it remains below this trend line specifically, if it's able to get back above, then this would be negated. So watch this pattern as well, because as of now, we had a daily close below, confirming there's likely to be more downside, at least back to the low 180s, potentially high 170s. Also, something very interesting happened today. If we look over here at the dark pools on CheddarFlow, specifically the dark pool levels feature, you can see here we had not only 2.6 billion in premium of signature dark pool prints on SPY, but we also had if you see over here on QQQ, we had 2.1 billion in premium in QQQ, which is very rare to see over 2 billion on QQQ. We see it decent amount on SPY, especially as of recently. We've seen a lot of over 2 billion and even 3 billion prints, but on QQQ, this is a lot more rare to see something over 2 billion, and this was at 366.94. Notice where we closed today was meaningfully below that level, and that print was just about at that high of day over here before we saw a lot of sell pressure afterwards. So if you are bullish, you're going to want to see not only this level get reclaimed, but also a gap fill, because that would negate the potential of this being impulsive. If you're unfamiliar with the term impulsive in trading, typically that's indicative of a trend change. Whenever you see momentum shift, for example, in this case, it would be to the downside, specifically on SPX, because we have two unfilled gaps right now. But whenever you see two unfilled gaps, potentially even three, that shows a shift in momentum compared to this upside momentum we saw previously. And that tends to warrant more downside in this scenario. So that's just a basic understanding of it. But again, if you are bullish, you do want to see these gaps fill because that can lead to some more momentum to the downside if they remain unfilled, especially for an extended period of time. And if I go back over here to the dark pool levels, again, QQQ 2.1 billion. But if I go back to SPY over here, with there being 2.6 billion today, if we look back on Tuesday, we can see that there was just 1.3 billion in premium, with a lot of other various singular dark pool prints. Remember, there's singular dark pool prints that hit the tape real time or within 20 seconds of them actually hitting the exchange. And then there's signature dark pool prints that are about 24 hours delayed. These are the signature ones, and then all of these would be singular. And we just saw 1.3 billion, so nothing too crazy. And then if we go back to Friday, because remember Monday we had off, there was a long weekend. Friday over here, we saw 4.8 billion in premium for a singular dark pool print. Now, this was also on an OPEX day, and not only any OPEX day, this was a quarterly OPEX, and by OPEX, that is option expiration. That's the third Friday of every month. In this case, it was a quarterly one because it is June. So it isn't like this is a game changer for everything, because yes, there is a lot of premium, but you typically see a lot of rebalancing on quarterly OPEX specifically. So I wouldn't put too much emphasis on this print, but we can still look at the signature dark pool prints from this day, which happened to be 3 billion in premium at the 440.85 level, which we are meaningfully under right now. So very likely this was a form of selling, and a decent amount of it. If you go back over here to Thursday, you can also see that we had a decent amount of premium, again 4.3 billion, but in this case it was a signature dark pool print, so even more than what we saw on Friday, because that was only 3 billion. This was at 437.18, which we are still under right now. So also a potential sign of selling from last week. And over 4 billion is pretty rare, guys. We've been seeing a lot more premium as of recently, but over 4 billion is always going to be rare. So this is definitely a good amount. And there's been a lot of these 3 to 4 billion plus around the 437 to low 440s range. So there's potential distribution in that range. But regardless, a lot of dark pool activity still to this day. It's been about 2 months now of straight 1 billion, 2 billion, 3 billion, even 4 billion plus prints hitting the dark pools almost every single day. So definitely something to take note of, because that is very, very uncommon. And just looking back over here to SPX to reiterate what I said earlier, I do watch this minor demand and now supply zone, depending on where we open tomorrow. If you are bullish, you want to see especially this gap get filled, and then also get back above this blue trend line right here, which would also fill this gap from previously. Otherwise, there is new momentum now to the downside, especially as long as we stay below this purple range, which also is acting as the neckline of this head and shoulders pattern, which I just shared earlier in this video. But there's 2 important days coming up. Thursday and Friday, again, characteristically have been green each week for the past 2 months or so. So it's going to be quite the battle between the bears and the bulls. Keep my levels in mind, and I'll see you guys next time on Sunday.